color in your cheeks. Do you ever get that feel that you can't shift, the tide that sticks around like summits in your teeth? Are there some aces up your sleeve? Have you no idea that you're in deep? I dreamt about you nearly every night this week. How many secrets can you keep? 'Cause there's this tune out.
Definition of SMEs. In Malaysia, small and medium enterprise are based on either annual sales or number of full-time employees. For manufacturing, SMEs have sales not exceeding 50 million ringgit or up to 200 employees. For services and other sectors, the limit is 20 million ringgit in sales or up to 75 employees. SMEs are categorized into micro, small and medium businesses. Micro enterprises have less than 300,000 ringgit in sales or fewer than 5 employees. Certain businesses are excluded, such as public listed company and subsidiaries of large corporation or government-linked companies. All SMEs must be registered with SSM or a similar authority.
Vision of SME. The premier organization for the development of progressive Ministry of Small and Medium Enterprise (MSMEs) to enhance wealth creation and well-being of the nation. There are 4 characteristics of SME. The first one is management. The second one is ownership. The third one is resources. And for the fourth is organizational structure. First characteristic, which is management. Unlike larger corporation, SME management is often more hands-on, centralized and flexible. In most SME, the owner is usually the manager. The owner is not only responsible for big picture planning, but also directly involved in the daily operation of the business. For the decision making, is often centralized. Instead of multiple levels of committees or departments, decisions are made by the owner or a small leadership team. This will allow for quicker responsive and better control over business direction. Since fewer people are involved in the decision-making process, SMEs tend to be fast and responsive. They can react quickly to change in the market or customer preference, a valuable trait in a competitive business environment. The management style in SMEs is usually more informal and flexible. There might be not strict rules or rigid reporting structure. This can create a more relaxed and adaptable workplace culture, which can boost morale and teamwork. The owner often drives the company development, playing a key role in growth, strategy, networking, and long-term planning. Their vision and leadership are central to the company's success. SMEs are generally more agile. They can adapt to market changes, customer demands, or economic shifts more quickly than larger corporations. This ability to pivot and innovate is a major strength of SME management. Let's move to the next slide. SMEs are known for their independent ownership and control. This means SME is not owned, controlled, or heavily influenced by large corporations, government institutions, or public investors. Unlike large companies that may be owned by hundreds or thousands of shareholders and governed by a board, SMEs typically maintain autonomy. This independence allows them to make quick decisions, adapt rapidly to market changes, and operate with greater flexibility. It also means that the direction and future of the business rests heavily on the decision of the owner themselves rather than external stakeholders. These businesses are usually self-owned. What does that mean? It means they are owned and operated by individuals, families, or a small group of people who are directly involved in the daily running of the business. This direct involvement often results in stronger commitment and personal investment in the success of the business. Unlike passive investors, SME owners are typically hands-on, making operational and strategic decisions themselves. There are 3 types of ownership structure commonly seen in SME. The first one is sole proprietorship, where one person owns and runs the business. This is the simplest and most common form of ownership. The second one is partnership, where 2 or more individuals share ownership and responsibility. And the last one is private limited company, where a small group of shareholders on the business, often involving close family or friends. These companies are not listed on the stock exchange and ownership remains private. Many SMEs are family-owned business. This is especially common in many parts of the world, including Malaysia. In such business, family members not only work together but often play key roles in management and decision-making. The business becomes more than just source of income. It becomes a family legacy. It is common for ownership to be passed down from one generation to the next, helping wanting to preserve tradition, values, and long-term vision. This form of ownership can foster strong loyalty, stability, and trust within the organization. However, while family-owned SMEs have many strengths, they also face unique challenges such as managing family conflict, planning for succession, and adaptation to modern business practice without losing their entity. For resources, SMEs often face limited financial resources. They do not always have access to large funding or investment capital like big corporations. As a result, budgeting and cash flow management become absolutely critical. They must be careful with how money is spent, ensuring that every ringgit is accounted for. Poor financial planning can easily lead to disruption in operation or even business failure. For example, a small bakery may not afford to invest in high-end equipment immediately, so they must prioritize spending on ingredients and rent first. SMEs typically have small numbers of employees. Unlike larger companies where roles are specialized, SME workers often wear multiple hats. It means they will handle marketing, sales, customer service, and even operation. This multitasking helps reduce labor costs but can also cause workload stress or burnout if not managed well. SME usually have smaller and fewer physical assets such as office space, machinery, or vehicle compared to a larger business. This limitation affects production capacity and the ability to scale operation quickly. Let's move into the next slide, which is organizational structure. Compared to large corporation, the structure of SME is typically much simpler, flatter, and more flexible. To begin with, the structure of an SME is often described as simple and flat. It means that there are fewer layers of hierarchy and fewer barriers between decision makers and employees. The role and tasks are clearly outlined, but unlike in the big companies, there is room to adjust and adapt quickly when the business environment changes. This flexibility is crucial for surviving in competitive or uncertain market. SME usually have very few levels of management. In fact, some SMEs may only consist of the owner and employees, with no middle manager at all. This lean structure can reduce costs and speed up decision-making process, as there is less bureaucracy involved. For example, a family-run restaurant may only have the owner managing everything from purchasing ingredients to supervising staff, while delegating basic role to worker directly. The biggest advantages of SME structure is the short line of communication. Employees can directly speak to the owner or manager without needing to go through multiple levels of approval. This promotes fast feedback, encourages team bonding, and often leads to stronger workplace relationship. If an employee has an idea to improve customer service, they can share it with the owner immediately and possibly see it implemented the next day.
SME Corp is the main policy advisor to the government on SME-related issues. It helps draft and review national SME development policies, such as the National Entrepreneurship Policy. It coordinates various SME initiatives run by different ministries and ensure they are aligned, avoiding overlap or duplication. They also work with other stakeholders like Bank Negara, MDEC, and MARA to create a unified SME ecosystem. As for example, they are coordinating a digital transformation policy across multiple agencies to support SMEs in adopting e-commerce and automation. Business advisory and support service. They act as a one-stop center that provides practical advice to entrepreneurs on how to start, manage, and grow their businesses. They offer consultancy in areas such as business registration, licensing, financial management, branding, and market access. They also help SME to understand on how to meet legal and regulatory requirements. For example, a small business is looking to export its product can approach SME Corp to get guidance on international certification and market access. Capacity building and human capital development. They organize entrepreneurship training, workshops, mentoring, and technical skills program. Their aim is to enhance productivity, innovation, digital skills, and leadership among SME owners and also workers. They also promote Industrial Revolution 4.0 readiness, digitalization, and sustainability practice. For example, they conduct a digital marketing course for SMEs to help them transition to online sales platforms like Shopee or Lazada.
Difficulties of SME: access to capital, talent acquisition and retention, and economic uncertainty.
One of the biggest difficulties for SME is accessing capital. For smaller businesses, SMEs, bank and other financial institutions often adopting a cautious approach to lending these businesses money, driven by reservation about their size and risk profile. This will make it hard for SME to invest in new equipment, hire employees, and expand their operations. Let's take a look at the situation. This SME owner approached the bank to apply for a loan. However, his application was denied after the bank reviewed his financial statement. The reason why? Because his company wasn't profitable enough, the interest rates offered simply too high, and his company lacked sufficient collateral. We move on to next, talent acquisition and retention. SMEs often have limited resources and significant competition from larger organizations, making the hiring and retention of skilled employees an uphill task. It can be challenging for SME to offer competitive salaries and benefit compared with these large organizations. The situation above shows how SMEs often struggle to meet high salary expectations when recruiting skilled workers. In this case, the candidate requested 8,000 ringgit, a figure the company couldn't afford. This makes it difficult for SME to attract and retain top talent as compared to the large companies. Economic uncertainty. Economic uncertainty remains one of the most significant challenges for SMEs. Rising inflation and increasing tax burdens have made it more difficult for businesses to manage operational costs, plan for the future, and maintain profitability. Due to limited resources, even minor shift in the economy can have a substantial impact on the stability, growth, and long-term sustainability of SMEs. Let's take a look at the video. Due to rising inflation and increasing tax burdens, an SME can face serious financial pressure and in some cases even bankruptcy. This reflects how economic uncertainty continues to threaten the survival of small businesses.
There are three obstacles of SMEs: lack of collateral and weak credit history, poor financial documentation and record keeping, complex loan process and high compliance costs. First obstacle is lack of collateral and weak credit history. Most SMEs lack fixed assets for loan securities such as lands, buildings or machinery. These fixed costs usually require as collateral for loans. Instead, they may only have mobile assets such as cash or inventory, which banks don't usually accept. In addition, many SMEs are new and have no credit history, which makes them high-risk borrowers in the eyes of banks. Because of this, loan applications are often rejected or approved with strict conditions like higher interest, smaller loan amounts, or shorter repayment terms. Second obstacle is poor financial documentation and record keeping. Many SMEs struggle with proper financial documentation. Their records are often incomplete or informal, using manual notes or basic bookkeeping. Without clear financial statements, banks cannot assess the true financial health of the business. This lack of transparency causes delay in the loan process and often leads to rejection. The third obstacle is complicated procedures and high compliance costs. Lengthy document-heavy application process for a bank loan involves a long document-heavy process. SMEs must prepare business registration documents, credit reports, tax records, and detailed business plans. However, due to lack the time, many SMEs lack expertise or staff to manage this paperwork. In addition, the cost of compliance, such as registration, processing, and consultancy fees, can be too high for small and rural businesses. As a result, many SMEs are discouraged from applying and instead rely on personal saving or informal loans.
Have you got color in your cheek?